Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Apple or Spotify, please give me a 5-star rating. It helps support the channel. It doesn't cost you anything. Also, please sign up for my free weekly newsletter, link in the description. All right, guys, the consumer prices rose by 8.5% in July, less than expected as inflation pressures ease a bit. That is the narrative being put out there by the mainstream media. Essentially, the inflation wasn't as high as they were expecting, and it saw a bit of a pullback. But obviously, relative to the years before, it is extremely high. But on this news, we saw the stock market and crypto rally up a bit, guys. We saw some upward movement, and we even had mainstream media saying the NASDAQ enters bull market, exits worst bear market since 2008. We are not in a bull market. I will tell you guys when this is BS, or if it's true, guys, this is BS. Be very careful. We look at the prices. I'm happy to see green. Bitcoin is over $24,000 right now. Ethereum over $1,800. But we are not back in a bull market. This rally could just be a relief rally, and then it rolls over to new lows. So just be careful. If you want to take profits, go ahead. Obviously, I'm going to look to do that. If let's say Ethereum gets to 2,500, Bitcoin gets to 30,000, but who knows if it makes it there? We don't know. Bitcoin could just crash tomorrow, and it has that downward pressure given the bear market, given inflation, given recession, and all the things that are happening. And bear markets, you will not see new all-time highs. That is a time when we are usually in an accumulation zone. And obviously, if you look at the charts, you can clearly see that, right? We had our peaks in 2021. We've crashed big time, all the way down to some lows that, were around since 2019. And look, Bitcoin could go a little bit lower, to 15,000 or so, find its floor there, and then slowly make its way back up. And we could be in this bear market for 2 years or so, right? So just be mentally prepared for that. But be careful with these mainstream headlines. Once again, look at this one from Fox. NASDAQ enters a bull market. We are not in a bull market. So just be careful. I just want to throw that out there. And if you want to swing trade these little pumps, these little rallies, sure, that makes sense. But don't expect new all-time highs. That is a long ways ahead. And look, these inflation numbers, even though they weren't as bad, they're still horrible, once again, relative to what's happened years ago. And the Fed, they have said they're still going to continue to raise rates. So I would be careful, guys. Just keep an eye out on all this stuff. And this is why I created this channel, to come bring you the facts, read through the lines here of what's happening, and don't fall for Fox Business and CNBC, because that's news, that's media for the masses. That is how the dumb money crowd gets, they lose essentially, and smart money wins, because smart money is not paying attention to this news. They're looking at the charts, the technical analysis. They're looking at what the Fed is saying, not what Fox Business is saying, and things along those lines. All right, let's move ahead to the news, guys. The SEC has launched an investigation into Coinbase staking programs. Gary Gensler is pathetic. I can't believe they're doing this. And, we've talked a lot about it. How dare you earn more yield and interest off your crypto on a crypto exchange than you would in a savings account at JP Morgan? And it goes back to why we call Gary Gensler Goldman Gary Gensler. He works for the banks. He is for the incumbents who are being disrupted, and they don't like it. And as head of the SEC, he's trying to stop Coinbase lending. He's trying to go after staking. Clearly, he's suing different crypto projects in the United States. Obviously, Ripple, Library, and others, right? They fined BlockFi $100 million. You guys know about all of this, but this is pathetic, man. I can't believe this is happening. And this was revealed via the Coinbase quarterly Form 10Q filing, where they mentioned the SEC scrutiny of their staking programs. Look, I have some crypto on Coinbase that I'm staking, specifically Algorand. I do some of my staking on different platforms, self-custody type staking, and so forth. But some certain crypto, you have to go to certain exchanges like OKCoin. I have stacks where I'm stacking there and earning Bitcoin rewards. So it's crazy, man, that the SEC is doing this. And in addition, there's some news here that private funds would have to disclose crypto under SEC and CFTC proposal. Now, I don't have a problem with this on its face, that private funds will just need to report. The problem is we've seen Gary Gensler and the SEC use this against the funds, the companies, and go after them. He's coming in saying, hey, don't worry about it. Just tell us what you guys are doing and you'll be okay. And secretly in a back room, they're looking at how they can stab these companies in the back. That is what they did to Ripple and many other companies. So regulators are considering requiring private funds with at least $500 million to disclose crypto holdings, leverage positions, among other things. So this is pretty straightforward. If they say, hey, you guys have a lot of capital under management, we want to know how many are going to crypto and other assets and so forth. I think that's fair. That's not anything that's ridiculous. But it's, once again, what is Gary Gensler and the SEC going to do with that information? Are they going to go after funds, sue them, penalize them in certain ways? Who knows? And that is where Congress needs to step in and put the roadblocks in place for Gary Gensler and the SEC to stop them from doing these draconian overreach regulation by enforcement. We need clear guidelines. Now, some not so good news, and it, of course, involves Elizabeth Warren. So U.S. Senators Warren, Sanders asked key bank regulator to rescind crypto guidance. So the TLDR here is they're trying to roll back the OCC, which under here, Brian Brooks, who was the acting comptroller, he was able to greenlight banks to be able to custody crypto services, issue payments with stablecoins, bank stablecoin issuers, and engage with other crypto-related activities. That was huge news that happened in late 2020. And it was just very bullish for the market, right? It really greenlighted a lot of different companies to be able to do this. Well, U.S. Senators Elizabeth Warren, Bernie Sanders, Richard Durbin, and Sheldon Whitehouse, all Democrats, asked the Office of the Comptroller of Currency to rescind interpretive letters allowing banks to engage in crypto activities and explain how involved banks are becoming in crypto. So clearly they're trying to, and Elizabeth Warren has been doing this for a while, to stop crypto, but she's been called out on her BS. There are more Democrats and Republicans who are pro-crypto than there are those that are anti-crypto. And that bipartisan support is strong. We're seeing it amongst some high-ranking officials. It's just these clowns here, and I'm surprised Bernie Sanders is partnering with this clown, Elizabeth Warren, to do this. But they're going to try to fight. And we know that they are lobbied heavily by the folks who don't like crypto. So what you want to look at, and I think it's open secrets, look at who's their donors. And that'll tell the story, right? We've seen it with Brad Sherman, who his donors are and why he's anti-crypto. And he's become buddy-buddy with Gary Gensler. And so has Elizabeth Warren. So Elizabeth Warren and Brad Sherman, and it looks like a bunch of these other Democrats are pals with Gary Gensler, who are all trying to slow down crypto. Like I've talked about, guys, the incumbents are getting disrupted. They don't like that. And of course, they've had power for a very long time. These regulators seem to kiss their ass and bend the knee to them. So this is what we have to do in fighting, and we got to get more folks on board. But, from a macro level, the bigger picture, they can stop disruption. And this technology, this asset class is global. It is not unique to or specific to certain markets. It is global, and you just need a mobile phone, a smartphone, to be able to access this technology, whether you're investing in it or building or using it in certain ways. So they are not going to win here, but it could be, excuse me, that they're trying to slow things down, so these incumbents can catch up. Now, blockchain payments company Ripple Labs is interested in the assets of bankrupt crypto lender Celsius Network, says a spokesperson. This is very interesting, my friends. Ripple, along with other folks, FTX and a few others have talked about looking to grab up assets from Celsius, which of course is in bankruptcy. And I know a lot of folks, some of you listening, have had your funds locked up there, which really sucks. I'm hoping they're able to get people's funds and get it back to them. But this is interesting. This is the time, if you're another company or an investor, to go grab up assets where you can at lower valuations. Obviously, the valuations for Celsius are going to be dirt cheap because of the situation you're in, and they might be able to get access to some of the technology assets and so forth from Celsius. So interesting update here. Now, some big news with regards to funding. I love to share this news with you guys to show you people are bullish on the market long term. They're injecting millions of dollars into the tokens as well as the companies building the infrastructure of the market. So blockchain startup Injective Nets $40 million round featuring Jump Crypto BH Digital. This is a Blockworks exclusive layer 1 blockchain. Injective wants to become the future of all things DeFi, but it faces stiff competition. So we're seeing the competition heat up, but these folks are getting the capital. Look at that, right? I think, I'd spoken about this months ago, that if you're an entrepreneur or even just looking to work in the crypto industry, now's the time. The money is flowing in, people are building, and if you have a great idea, you can go to some of these hedge funds and investment firms, and I'm sure you're going to get at least $10 million, $5 to $10 million, right? You have a great idea, you could probably get $100 million. So it's certainly a great time to be able to get capital, build, and see what you can do with it. So Injective is behind a layer 1 blockchain network of the same name, which launched its mainnet last year. It's designed for developers building DeFi applications, including exchanges, derivatives, prediction markets, and options. Eric Chen, Injective Labs CEO, told Blockworks that as the project evolved, it slowly became a general-purpose layer 1 blockchain with a sector-specific focus. Chen is hoping that developers will launch their DeFi applications on Injective over the raft of rival smart contract-powered networks on offer, such as Ethereum, Solana, Avalanche, and Binance Smart Chain. So competition is good, my friends. Competition is healthy, and it's still amazing to see the capital these folks are raising to build. And we'll see, which ones actually survive and are able to put out a good technology and get the adoption, guys. Because look, in the .com boom, there were a lot of websites, right? A lot of different tools, a lot of search engines, right? But only Google came out as the big winner. And of course you had Yahoo, but it hasn't gotten to say, it lost a lot of market share. And, in Web 2.0, you had a lot of social networks, right? Friendster, MySpace, but Facebook and Twitter kind of became the winners. So you're going to have that competition, which is great, and we'll see, who becomes the winner here. The great part of it, guys, this time around, you have the opportunity to be a part of it. You can get the tokens and benefit in the growth and adoption of these blockchains, which obviously impacts the value of the tokens. Finally, guys, Web3 Watch, new NFTs from Lamborghini and Ledger, Fox to air first blockchain-based show. The crypto asset class is growing, it's maturing, it's branching off into different things. Obviously, NFT is a branch off the crypto tree, and you're seeing a lot of big brands and folks who are jumping into the crypto market. So it's amazing what's happening. This week, Nas Academy partnered with Invisible College and its NFT project Decentraland to token gate online courses focused on Web3. In funding news, Andreessen Horowitz invested $6 million into Web3 startup Halliday, while NFT distribution platform Pinata raised $21 million in funding led by Greylock, Pantera, and Offline Ventures. And then there's let's see here, the top drops of the week. Prap Chickens NFTs. Community and Rick and Morty creator Dan Harmon is behind Prapopolis, a new NFT-powered animated comedy show produced in partnership with Fox Entertainment's Web3 media and creative technology arm, Blockchain Creative Labs. So you have big media companies getting involved now. Lamborghini's Epic Road Trip, with its third and latest NFT collection, Lamborghini promises to take collectors on an epic road trip to the moon and beyond. So you just see everybody's getting involved here, guys. Pretty amazing what is happening. And you can see this cool graphic they put out, Lamborghini, that is, with a Lamborghini on the moon. Exciting times, guys, exciting times. NFTs are here to stay. And don't forget, you don't necessarily have to invest in NFTs. You certainly can do that. But what you want to look at is which platforms, blockchains, that NFTs are being launched on by these major brands. We just talked about Coca-Cola launching on Polygon the other day. So, like I said before, that will benefit the native token of that blockchain. So that is, if you don't care for NFTs or owning them, that is one thing you do want to pay attention to. Which blockchains are the NFTs being launched on? Because that will trickle that network adoption and the building on it will trickle down to the native token. So I hope that you guys get that. Very bullish in my opinion. Let me know what you think about the news, guys. We got this rally happening here, but like I said, be careful. We are not in a bull market yet. There will be a time where we will go back to the bull market, but so be very careful. Don't follow the media narratives. Let me know what you guys think. Leave your thoughts and comments below. Hit the thumbs up button, share this video, and I'll talk to you all later.